Hey, what's going on, guys? It's your boy, MC Fire.
And Ice Cube.
Hey, guys, we are here again, coming with a video, setting you guys up for the rest of the week. It is Tuesday, and we are going to launch you guys. We're clocking in, so you don't have to. We got a couple goodies for today. We're definitely be going over the SPYs, the Q, Bitcoin, the ETF in particular, maybe some gold, and some other goodies. So stay tuned. Here we go. All right, straight to the charts. Now we have a chart of Comcast pulled up, but we don't really care about Comcast. We care about what you guys care about. The first thing on the list is really FOMC. What is going on? What the players are and stuff like that. So here is the lineup for this week. Let's go to tomorrow. Already got it pulled up for you guys. Q, what is that? What does that big red folder say?
FOMC meeting minutes.
Yeah, we don't like that. We don't like that. Why? Because the FOMC increases volatility. So, for those who don't know, where you can get a lot of economic news for what's coming out in the market. The mic's too far. Is that better?
Yes.
Yeah, heck yeah. Okay. What's coming out in the market? In particular the FOMC and those meeting minutes, it's literally right here on Forex Factory. And you see also tomorrow the British pound, England essentially, has their CPI. So kind of a big day in the market. You're going to see a lot of movement probably in the British pound and in the US market. Typically what happens during these meetings, they have their strings on the world and they just pull it as they see fit, and the market goes nuts, absolutely wild. So
like a puppet master.
Definitely they have. I'm pretty sure this is the meeting of the puppet masters for sure. So we'll table this for now, but the reality is that you definitely want to be cognizant for the fluctuations of your trade. That is going to be happening tomorrow, and that's a Wednesday. Diving in first though, we're gonna take a look at Tesla. Now we want to bring up Tesla out the gate because remember the day before we brought up in our videos S&B Capital and their amazing virtual training that they did for free, and at the end they provided some really good nuggets as regards to play setups. And for you, this is also a good cue, so you could kind of see, hey, in the learning, is it practical? Does it actually work? What are all the goodies there? So we have a very nice kind of chart of the Tesla, right? You have a weekly chart of Tesla here. And what I did, I normally don't have these rotational lines, but I put them there for you. We're not a day trader, but I wanted to showcase what a day trader might do, and the learning that we learned from, I'm trying to port it here. The learning that we learned from yesterday is kind of focus on the graph here because it's pretty straightforward. It's got your legend here. This is your stop loss. This is the blue arrow is your entry, and the green arrows are where you're going to take it off. So the idea in their setup, shout out to SMB, is in a hitchhiker scalp. They're saying, hey, if things push and it kind of goes horizontal, that break is kind of where you would take a buy, right? It's where you take a buy off of the break of that range, right? Call it a range or bar coding. And then 1-to-1 and then 2-to-1, that's where your targets would be, right? So that actually came into play, and we saw that from an alert that we put on yesterday. If Tesla breaks above this range, we want to know, we want to see what happens, right? Kind of setting up our own hitchhiker's scalp, right? So if we kind of zoom into Tesla here, this is a 10-minute chart, but we have, I believe we have the 2-minute chart here. We're going to go to the end of that chart. Yeah, there we go. Boom, cannons. So here you have that initial break, right? There's that initial move where they were talking about in the guide. It's very, very defined on the 10-minute chart, like just absolute massive pushing. So nothing but volume and force to the upside, right? Well, actually, I think, is this even the right day? Hold on, guys. this is the right. It should be, but yeah, it is. Okay. It looks weird for some reason. Okay. So yeah, here's your push. Here's your push right here up into 178.06. There's just a violent push, and then it starts barcoding or just chopping sideways. That's kind of what they were talking about. So if we re-pull up their chart, which we will do here, boom. There's that push. This is a push right here, pushing up, and then the barcode. There's a choppy barcode there, and then the break would be above kind of this level. Now it wasn't exactly perfect sniper entry, definitely wabam, but we set it up to take the buy at our next earliest convenience, which was up here. It's a little bit below, but kind of up there, right? And then what we'll notice is if you followed kind of their way of doing things, we'll put a box here to kind of showcase what your risk is. So from here to basically the base, it would be a risk. So your reward, oops, still there. Shout out to us. Your reward, let's go put that on here, would be up here, right? So we make a box, matching shapes. There you go. You're looking for potential up there. Boom, cannons. Right, so this would probably be the first spot where you take your first leg off, and then same thing, you take your second leg off in step right before you get to the resistance level. And I put these purple lines here to kind of showcase resistance inside of the weekly. So if we go back to the weekly, the white lines are weekly rotation on a bigger time frame, but on a smaller time frame, this is what your rotation would look like, right? So in a smaller time frame, it respects this downward move, right? Kind of hits resistance. This is on a 10-minute chart. Finds fair value, tests again the resistance again within the weekly chart. We score right, comes down, finds fair value, and then absolutely rockets up into the resistance, right? Then it starts barcoding here at the top. Now again, the difference between, let's say, doing this and doing this is what? We see a clear defined break of that immediate little range after the push. So after the push, barcodes, breaks, you take the buy and it runs, right? Very, very awesome stuff, right? Another key note to notice is when we bought it, we'll go to the trade analysis. Normally, we're not going to normally show our buys, guys, but what we'll do here is for lesson's sake and why some verticals are better than just naked calls or puts. On here, the price for a call option for Tesla for the week is like $300. 435 bucks essentially. It's $4.35. Now if you take that same call option at the money 3 weeks from now, it's what, $990 or $9.09, $9.90. But we got a vertical, which you can subtract that 990 from 425. So essentially it cuts that in half, putting it right a little bit over, $400, give or take, 20, 30 bucks. So what's so crazy is this play is 24 days out. This play is 3 days out. There's a reason why I did that. The reason primarily is if this breaks into a weak, like a strong or a weak uptrend, you could potentially see this play run for weeks, right? It is a buy on the weekly above the 8, above the previous week's high. So it coincides with a potential 3-week play, right?
So why is the 3-day and the 3-week the same price?
Why is the 3-day in the week the same price? For the options chain? Mm-hmm. Very good question. So we kind of made it the same price, right? As you have more time on your options contract, it becomes more expensive because to kind of simplify options, they have extrinsic value, which is like where it is relative to price, and then time value, which means how far is my contract relative to right now. So contracts that have a short amount of time are cheaper because they don't have a lot of time. Whereas if you have a lot of time for the play to play out, it has its own inherent value. Time is valuable, right?
So going back to the 3 day, that's just me buying the Tesla straight out at that 435.
Yeah, you're getting the option at the 435 at the same strike price. So this is 185, right? This currently 185 strike is $4.35, but only for how long?
But am I also doing 50/20?
You could do 50/20, but again, let's say you did 50/20, right? 50/20 delta. She's talking about the delta, the 51 delta, and let's say you took the 17 delta. This same contract would be, $90 off, so essentially 335. But you're only getting it for 3 days. So if it has more room to run, you would have to either roll it, or you would have to you would almost immediately roll it, right? You would pretty much at the end of the week you'd have to roll it, right? If you wanted the play to continue. So what I'm really saying is basically for the vertical at the same price is almost like you bought a call with no protection. So I got 3 more weeks on my play for the same price. Literally almost for the same price. This 435 naked call has by itself is a good play, but the reality is I have my play for 3 weeks, and it has some protection, right? I forget which one it is, Vega or Row protection. Basically, the time decay. It has some time decay protection. Not a lot, but it has enough, right?
Okay.
So out the gate, I just want to showcase that because you can get into a longer play with a vertical at the same strike price. Okay. And that's really good for people to see that. I hope you guys were paying attention. And so the other play that we want to kind of showcase, we do take 0DTE trades on XSP. I'm not trying to trade it. We're trying to view it. So we'll go to chart. That's probably what it's telling us to do. And so on the intraday, yes, the XSP is connected to the SPY. And what we did was we took a zero-dated options trade a little late. Like probably should have took it immediately on the dip. But I wanted to take this call like after it kind of retested this range where it kind of rallied, cycled here. I wanted to take it as it approached there. I was like, okay, these things are kind of cheap. So if I take a butterfly, yeah, it'll be up here, but I don't want this to break down and start falling. I want to wait to see if we get to a good spot, and then I'll take the call butterfly. Took the call butterfly. It actually became profitable right around here. So I pretty much had to wait the whole day, but it was pretty sweet. Yeah, I know, right?
Usually that's when plays tend to move the most. I've seen that it's either early morning or towards the close of the market.
Yeah, good point. So like if we zoom in here, actually we'll make this we'll expand this 10-minute chart here at that spot. So yeah, what Q's talking about is same thing on this day. This was pretty much flat until the end of the day when it broke range and it started steadily climbing. Then the next day in the morning it gapped, climbed, and just didn't stop, right? So you'll see that a lot. The best times to trade are like this in the morning, or it's just going to chop around. And then towards the end of the day, it makes a push down or a push up. She's absolutely right there. What the reasoning behind that is a market open, maybe overnight some news came out, right? And so, or the prices moved a lot. So people are already antsy about either their trade profitable, taking money off the table, or their trade is negative and rushing to get out of the position. That's why it's so volatile. And at the end of the day, people might see it and they're like, okay, it didn't really move. Maybe I can set up a play for tomorrow. And this is perfect for going into our next illustration. So for XSP, with the volatility of the FOMC, it might be advantageous on days like today to get into plays for tomorrow, right? Because by the time the meeting starts, or let's say it gets leaked, right, the volatility is going to be going crazy. So the price to get in is going to be extremely high.
Okay.
So if you're looking to play volatility like a butterfly or some kind of straddle, then getting in a day ahead of time is probably a good idea, right? So tomorrow, again, we have FOMC tomorrow.
So don't get in tomorrow.
Well, you can get in tomorrow, right? But it's better to get in today. So shout out to volatility. Next play, COM. I want to see what you've learned. Let's see, COM. So you tell me, what do you think? Do you think we're gonna go to the weekly? For ExxonMobil, right? Yeah, ExxonMobil, right? XOM, excuse me. This is the, you know Exxon, like the gas station.
Mm-hmm.
Okay. So what can you tell me off the rip? We can start from the simplest. Is it an uptrend, downtrend, what?
It's in an uptrend.
Yes, ma'am. You see green colors. Very nice. And then uptrend. How can you prove that it's an uptrend?
Bottom left, top right.
Very good. Bottom left, top right. Love it. Okay. It is in a, could you tell me weak or strong uptrend?
Weak.
Weak. Okay. I'll give you that. So the way we determine weak or strong uptrend is it above the one average or the moving average on a weekly, right? Not the moving average, excuse me, the Keltner channel. One standard deviation on the Keltner channel. If it's above that, then I would consider it a strong trend. Okay. So this line right here, this is the moving average in the middle. Let's say it's between the 21 and one standard deviation, right? I would say it's weak, but we like strong because it's above that, and it's still holding to its 9-period moving average.
I would say weak because it's going sideways.
Yeah, you could say that. It's currently range bound. I'd say that, but that's after it did all this push. So think of it like a runner. If a runner runs a marathon, is he going to be able to immediately just run another marathon, or does he need to take a rest? Take a rest. So if a sprinter sprints or he runs a marathon, he's just been running, he might need to take a little bit of a rest to recoup some, air and water. And then, well, bam, he begins pushing again.
Mm-hmm.
So what do you think is a good thing from what you've learned? How do we know when to buy? Do you remember our buy triggers?
How do we know when to buy?
Yeah, can you give me a buy trigger?
When it goes above the high of the last week candle.
Very good. I like that. So it breaks out of the range of the last week's candle above the moving average. So a good time to have bought the ExxonMobil is, it comes, touches, goes peekaboos in here. It's above this. And then once this is a high here, so don't take the buy. But here, it breaks a high on this candle, right? So last week, probably would have been a good time to take that buy. But let's say, for example, if it breaks a high here, then you could see a buy, okay? And that coincides. Ooh, sorry, Mike. Sorry, guys. If you guys had headphones on, I'm sorry. Let's do XLE. I almost broke the mic, y'all.
Move too fast.
I know. Oops. Is that better?
Yeah.
Try not to hit that bad boy. So here on XLE, we actually have that. We put an alert there. If it crosses above this week's high, then we'll be good to go. Okay.
Mm-hmm.
Nice. So we're basically looking for on XOM like calls above 119.7, and then here calls above a 95.46. That's where we ideally, if you're gonna look to take this play, this is where kind of we would want to do it. And then so let's go take a look at the Qs, and we'll pretty much Qs and SPY, and then we'll do some other cool stuff. So if you're looking to get in late, let's say for example, like this is like on a weekly chart, this has already left the train station a month ago. So for some people who are just now finding our channel and you're like, hey, what's the smartest way to get into the queues? I personally would be like, the train's already left the station. But if you're absolutely bent on getting in the queues, I would say, okay, let's just use what S&B Capital said about getting into the queues. I would use the buy the dip method, the what they call the rubber band method. So if you have a dip, you would typically want to buy on the dip, right? Now on a weekly chart or daily chart, it kind of just depends on what kind of chart it is, right? But I would look for a dip to buy, and you would either have to hammer down in a time frame to do that. So we have the 10-minute to 10-minute chart. You could see this as a potential buy the dip, where this candle took out the previous two candles, right? But even then, buying the dip is how you would get in on an uptrend, a strong uptrend that's not really presenting a weekly or daily buy. You might have to hammer it down to the 10-minute chart and take that candle. So you see this very extended downturn, right? And then you see a very juicy buy, bullish candle, and then another candle. You could almost take that. That's something that you could hammer down on the 10-minute chart and take something like that. Other than that, I wouldn't be looking to take a huge weekly position. Again, this morning might have been a good look too. This one candle almost overtook these two 10-minute candles. So I would be looking for something like that. If you're super aggressive, same thing on the 2-minute chart. But again, that's more for scalping. So the smaller the time frame, probably the smaller risk to reward you'll have for that play. So that's how I would get into the queues late if you're just absolutely hell-bent on getting on it. Narrow down to a smaller time frame, like the 10-minute, the 30-minute, and then wait for a buy the dip opportunity for that. And then we're going to go to, do you like Bitcoin? GBTC, here we go. We'll see what Bitcoin's doing from a weekly perspective. So this is on the daily, right? It's looking good on the daily. Nice juicy buy signal here on the weekly. Very juicy buy signal at the break of this high, right above next day's high. You could bought here. You could bought here. It's really juicy. Trains kind of left the station already for the next push. So I would be weary about taking a buy. Now it is in a very strong uptrend, and we do prioritize strong uptrends. Remember, outside above the 1 ATR, I do classify this as a strong, very strong uptrend. Trains left the station, same rules apply, right? AMD, that is something we are watching like a hawk, seeing what it'll do. If it breaks this high, kind of pushes past it, really conservative. It could also be a transition. The trend has changed on the weekly, and it does have decent volume. But to be able to push, I would need to see like an actual trigger confirmation for AMD. And then Palantir. Let's say PLTR. So it's kind of a mixed bag for this guy. It technically is this is what I was talking about, like it's in a weak uptrend right now.
I'll be back.
Okay. So guys, it is in a weak uptrend right now. And if it breaks above previous week's high, cool, take it. If it breaks below this range that has become a very strong level of resistance, this could be a very clear signal to sell, right? Because let's zoom out here. If you break below this range, the next thing I would expect it to test is fair value. So break, come to the middle, find some level of fair value where it likes to hang out, and then figure out what it's going to do from there. Just something to think about with this. It could potentially break and retest. That is the better play. The break and the retest is by far the better play. So just, can you be patient? And then last but certainly not least, SPY, right? So what do we think about SPY at this super overinflated level? I wouldn't say super overinflated. I'd say super overinflated because after the dip that happened this week, it has made a massive rally. Massive rally. Remember, this dip kind of came on news that the Fed wasn't going to hike rates. That's why economic news is so important. You have to be able to discern, is it fundamentally something in the market that's broken, or is it news that's driving the woes of certain companies that have big balance sheets, or people going and getting hysterical because news came out, trying to get ahead of it. So this dip, fundamentally, the market wasn't necessarily broken. It was just people hadn't necessarily counted in or out the financial news, right? So this dip happened, massive rallies, good stuff here, and now we're looking at all-time highs, testing this level of previous resistance from last week, a weekly candle at the highs. So it's kind of riding the top of that for the SPY, and over like after hours, it's kind of already over that. So that's really good news for if you're a bull. Not so much good news if you're a bear looking to like sell premium or short the rally. I see this as like kind of a slow, steady grind that's really good for uptrends until it meets some sort of resistance, like massive amounts of sellers. But like a slow, steady stair step up is kind of what you want to see. What you don't want to see is, let's see if you find it, like this, right? Huge smack in the face to resistance level, double tap, and then it falters, right? Because of space and time, it went up very, very aggressively, not very sustainable. But this can be very sustainable for good duration. And then you'll typically see that it'll start uptick, speed up acceleration, and then as it apex or goes higher volatility, it'll start selling off, right? But if it's just steady like this, it can just go, like it can just run. This is kind of what I'm seeing here, right? As it previous highs, right, just kind of slowly drifts up, and then massive acceleration, then failure as it reaches some level of resistance. Okay, so we fast forward this way, kind of the same thing. Slow grind up. Even this week, you can see this week is kind of or this day, slow grind up, little failure, and then slams into resistance, and then it fails. Right? That's somewhere where volatility might not be your friend. But if you're looking for things to go higher, then this angle is kind of what you want, guys. So that's all we got for you guys. Q ran off, but I'm still here with you guys, clocked in. I'm just kidding. She's right over there, guys. We are tapped in for this week, so expect to see us maybe not tomorrow, but the day after. But you guys have all the juice that you guys need for those 2 days.
Sorry, everybody. I had to get stuff prepared for the Sabbath. So
yeah, she gotta get everything jacked up because she's awesome. But yes, that's where she ran off to. But guys, we're here for you guys, and let us know what you guys want in the comments. And this is your boy MC Fire
and Ice Cube.
You guys have a good day and goodbye.
Bye. Shalom.
Bye.